Yo, what's good, guys? Pips of Africa is back again with another video. It's been a very long time, guys, since we spoke. Now, I'm here to talk about the Wyckoff schematic. This is a very, very important part when you're trading smart money concept, because if you don't understand Wyckoff schematic, you're still going to have a big problem. Because when you trade order blocks, strategies, supply and demand, you're going to need the Wyckoff schematic information that I'm going to be dropping out right now. So the Wyckoff schematic, it happens, you can check it on the monthly time frame, weekly time frame, daily time frame, 4-hour time frame, 1-hour time frame, all other time frame. You can see, you can find Wyckoff schematic in all the time frames, even the 5-second, 15 second, if you have something like that. Because I don't trade a 15-second, 30-second time frame. I just end up trading I just trade 1 minute time frame up to monthly time frame. So now, without any waste of time, what you see on the screen is what we call a Wyckoff schematic. How do you then trade this thing? How do you then know that the Wyckoff schematic is now forming, is now starting to form, right? So let me try to add something so that this thing will make a good sense to you. Let me try to add something that will help you to grab this concept too fast, right? So let's say above here. Let's say there you have push down here. Now this push down. So what happened here is that the market left an order block above here. Right? Let's put it like that. Let me just say it like that. Okay. Let's say here there's an order block here for another time frame. This is 4-hour time frame, by the way. Then let's just assume that here we see a daily order block. Right? This is a daily order block. This is what I want to show you right now. Very much important to understand the Wyckoff schematic, right? This one is a daily order block. So what I know about these things, and according to my experience, right, is that it's only the U-TED that is allowed to tap inside the higher time frame, area point of interest. Let me repeat that. Only the U-TED that is allowed to move and tap inside the higher time frame a point of interest, or the higher time frame order block, or the higher time frame supply and demand, right? So as you can see here, it's only the U-TED that went inside the daily order block, because this is the 4-hour Wyckoff schematic, right? This is the 4-hour Wyckoff schematic. And then only the U-TED that moved up and tapped inside the daily order block at the daily point of interest, right? Now, from this zone, from this area here, we had the PSY. After the PSY, you had what? The buying climax. After that, we got the AR, automatic reaction, secondary test, sign of weakness, UT. After that, the push down, the push up, which is the final push, UTED. Then the push down, which makes the sign of weakness, right? Which shows us that the market is ready to push to the downside. Then we know once we get the sign of weakness, this one, some of you know this one as a break of market structure. You see it as a break of market structure, right? And you are very correct by that. And then here, someone is also seeing this one as a break of market structure. This one, especially retail traders. You also see this one as a break of market structure. Then which one you need to trust? If you see two break of market structures, you must know that there is a possible Wyckoff schematic there. You might be seeing a Wyckoff schematic that's occurring there, because you got what? The two break of market structures at the same time. You got a break of market structure to the upside, the break of market structure to the downside. Then this break of market structure is the true one, this one here. Because most of the time you'll find out that here there's an order block here, right? which caused the market to break the structure right here. And then here, there's also an order block right here, which caused the market to do what? To break this structure here, right? And then you are now getting confused. Let's say here you placed your buy entries here, then you got taken out by the market, right? So let me just give you a tip, just a good tip, real quickly, right? So how do you then trade Wyckoff schematic successfully? Because this video, I don't want to see this video taking long. Just want to be short on this one. You see, you got a terminal supply, bias climax. Bias climax is above terminal supply. It's always above terminal supply. And then bias climax, after that, going to get the AR automatic reaction. Secondary test. Secondary test is always below bias climax, right? So that when the retail traders place their trend line here, they will be waiting for what? They will be waiting to sell the market right here. Then the market will push up, getting these ones out and these ones out, right? So, but I'm not there. Let me try to do this video very quickly to make it very quick. All right. So above here, you're going to get a UT, which is above bias climax and ST. Right above UT, you're going to get the UTET. Then the UTET is the final push to the upside. Then the market is going to the downside. We're going to wait. Let me just emphasize this thing to you guys. You have to wait for this for the sign of weakness in order for you to trade the retracement. Repeat that. You have to wait for the sign of weakness in order for you to trade whatever order block that you see above here. And then you're going to start marking a certain order blocks here. They say there's an order block right here. So this order block that you see here, this one right here, this order block that you see here, we have to get, you have to wait until you get the sign of weakness here, this push to the downside, which breaks the structure. Then you know that the move that is going up is acting as a retracement. Then you can take the trade from this order block here, right? Because you can see that the market has broken the structure already, and the Wyckoff has been formed is now complete now. And then you have to go back up and see what was the cause, what caused the market to break the structure, this structure here. You go back and check, there's an order block here, then you must wait for the market to get inside the order block zone, and then you take a trade from there. It is simple as that. It is simple as that, right? But keep this in mind, that the UTED is the one that must tap inside the higher time frame point of interest. UTED, which means after distribution, is the one that must go higher than the UT just to tap inside the higher time frame order block, or just point of interest, higher time frame point of interest. It is only UTED that is allowed to tap inside the higher time frame point of interest. That's how you must trade the Wyckoff schematic, right? It will help you a lot. This is the beautiful picture, guys. You can pause it and try to take a screenshot and go. Then you have to go and practice this whole thing. All right, let's then carry on with our session. All right, so now I'm done explaining the Wyckoff schematic now. So you can find out that even here, there's still an order block somewhere here, because for the market to continue to break the structure, it has to introduce the supply above here for it to break this structure right here. All right, but without any waste of time, let me just get into the chart and show you something. Before I even go there, let me just show you the analysis of the Wyckoff schematic and show you that I know what I'm talking about. Right, so now, okay, so this was the picture that was taken on the 28th of October, 28th October to 2021, right? So I saw the market moving sideways. Once I see the market start to move sideways, I know exactly that the market makers wants to manipulate us as retail traders. Market makers wants to manipulate us as retail traders. So that is why you see the market trying to consolidate or to range. The market is ranging. If you see that the market is ranging, you must know that there is a possible Wyckoff schematic there. If you see the market, if you see a ranging market, you must know exactly that there is a potential what a Wyckoff schematic that is that is being formed by the market makers there. By the way, the retail traders, most of them, they know nothing about Wyckoff schematic. So I'm going to teach you what I was labeling earlier on. So you see this PS, the prenup supply, and then above you're going to get the bias climax. I told you that the bias climax is always above the prenup supply. So the market will push the downside, trying to create what the AR, automatic reaction. Then they push up, and then the ST is always below the bias climax. Then the market will push down, creating the sign of weakness. So the sign of weakness, it must always be below the AR. Sign of weakness is always below the AR. In other words, this is the break of market structure. Sign of weakness means the break of market structure on the sell side. On the buy side, it's a sign of trend. But here, if the market breaks the structure to the downside, we call it a sign of weakness, which shows us that the market is ready to go away, to go to the downside. So I knew that the market is breaking after creating the ST and then the sign of weakness. I knew that the market has to move up for this schematic, for this Wyckoff schematic to be a true schematic, right? So after this was created, I knew exactly what I'm looking for. You see, the U-TED was already there, right? I knew already that the market has to push above this high, because the rules of the schematic, of the Wyckoff schematic, it says there must be a push above the UT, which will give us what the final push to the upside. So this one was being measured by this imbalance that was here, right? So this UTED was being measured by this imbalance. So the imbalance is the gap between the 2 weeks. So I'm going to talk, that is the topic for another day. But if you check my previous videos, you will see what is the imbalance, what is the imbalance, how to trade the imbalance. But here, this one is for Wyckoff schematic. All right, so now the UTED was our final push. I was still waiting for the final push to the upside. You see the market, it went up, then it did something here, and then it pretended as if it wants to go lower. And I knew that I'm still waiting for the UTED to occur. I'm not going to take a trade on the EuroCAD until I see the push above the UT. That's when I'm going to take the decision of selling this market, because I know that this market has to sell. So we got the UT. After UT, we got what? The sign of weakness. So I was only waiting for what? For the UTED to start to be created by the market makers. So let's get into the chart and show you what really happened. You can see the date 28. This is not the replay mode. 28 October 2021. All right. So now let's get into the chart. So check here. Check this thing right here. Just want to show you something. All right, so now I want to quickly finish up this video. So if you remember my upthrust, let me try to remove this thing and put it on this side so you can see everything. Right, so why is it very important to understand this thing of Wyckoff schematic? You can see that here there was this order block, right? And this order block, it was valid because it helped the market to break the structure. Right? If I can quickly show you that there was a break of market structure here, we're not going to be wrong to take a sell based on this buy to sell order block here. You are not going to be wrong, right? But some of you can see that the market it pushed a little bit. It created what the equal high. If your spread are too high, the market was going to take you out because surely your stop loss was going to be above this high. So I was very, very safe on this trade because I knew that I'm still waiting for the push. Remember what I said on that screenshot there, on that picture that was taken on the 28th of October 2021. So I said to you, I'm waiting. There was a labeling there. Let me try to label it again. Right. So here I saw that here there was a primal supply. Sorry, the primal supply that was there. The primal supply. After that, we got what we got the bias climax. So I'm trying to bring back the labeling here. So now we have what the automatic reaction there. That we're going to have what we're going to have what the secondary test. I'm just bringing back those labeling there, right? After that, we're going to have what we had there the sign of weakness, the break of market structure to the downside. Then we had what we had the UT upthrust. Then we got what we got the sign of weakness there, the sign of weakness. Then remember what I said there. Still remember, I'm not going to repeat explaining this way. Now, right, this one is here. This one is right here. Perfect. And then this one is here. This one is right here. And then if you remember very well, you will remember that I said to you, I'm looking for the upper thrust now. The upthrust is the only thing, the upthrust after distribution is the only thing that is missing now, which is also known as UTET, right? AKA the UTET. So now, after I got the upthrust, this one here, I knew that for the schematic to be complete, the market has to give me the UTET. If not, I'm not going to trade this market. Let me show you how do we then remember above here. I said to you, now you got your UTET now, right? What else that is missing? So you're going to take a trade based right here. No, you're not going to do that. You must wait. Patience pays. It pays. You must wait on the market to push the downside and then break the structure from the UTET and then wait for the retracement back to the UTET. Let's check that here. Let's check that here. You see what happened here. This was our UTET because this is the only push that went above the upthrust, the UT. This was the only push that went above the UT. So after this one, then I was ready to take, because if you can see even my sell position here. So I took a trade here. Let me try to move this thing or just leave it here, right? So what I did here, if there is no order block, what you need to do is this one. You need to take the 50% of the week, right? You measure the 50%, then you take your trade at the 50% of the, see what happened here. The market, it did exactly what I'm talking about. So guys, thank you so much for attending here. As you can see that here I had a bit minor problem, but I'm trying to fix it Right, so now you can see that the trade, it was taken here. This was my entry. Then let me show you my stop loss is obviously above the U10. Of course, it's above the U10. So my stop loss is above the U10. So my entry is here at the 50% of the week, because I was looking for the move up, taking the liquidity here, because this was the liquidity above here. And then sometimes it won't look like this. It won't create the double top here. It will just this UT, and then they move up, then they move down. This is what I'm talking about, is what happened here. And then remember here, we got our sign of weakness. We got our sign of weakness, right? And then this one was our sign of weakness. Let me try to do it like this, because this might confuse you. Let me try to put it here. This is a sign of weakness. So now remember what I said to you. I said to you, the market will go above, will go down. You don't take a trade here right at the U10 point. You wait for the market to prove that this schematic is true by breaking the structure to the downside. The structure was broken. Now I was good to go. You can see how simple it is to trade this thing. You need to be patient. Patient. Patience pays. You see, you don't take a trade here. You wait for the U10 to break the structure. After breaking the structure, wait for the move up, because there was no order block here. Then you mark the 50% of the week, and then push down, push up. You take a trade here at the 50%. I took the trade here. Then price went above a little bit, and then it showed to the downside. That's how you have to make money here. It is very easy, but you need to be very patient with these things. Right, you need to be very patient. Right. What about the TP? Let me show you something very interesting about the TP. So we are now approaching the end of the video. Let me show you something about the TP of this thing, because I'm not guessing here. Everything is calculated. Everything is calculated. So you can see that here below this order block, there's something I want to show you here. There's this order block. There's also this order block here. So my trade, my TP was based on this order block, these two order blocks, right? So my TP was based on that order block. So you can see now that my TP was here. This is the 50% of that order block. This is the 50%. So my TP was somewhere here at the 50%, but above the 50%. I can't just put it exactly at the 50%, but it has to be a little bit above the 50%. So all the way to the downside, this is how